Hello, everybody. This is Brandon from 13 Market Moves. I missed you already. All right, cutting to the chase. Adobe, okay, guys? It's reporting earnings today at December 9th, 2020. It's about 11 a.m. when I was recording this. And I want you to pay particular attention because we think there's going to be an awesome trading opportunity here. But it's a little bit counterintuitive because will the bullish productivity software price action continue for Adobe after earnings? And that's what we're going to find out. And you're going to find out what we think and what we're going to do at 13 Market Moves. Okay, so let's cut right to the chase and get into the nitty gritty. Listen, look, Adobe has been beating earnings and doing really great with their guidance. Let's face it, the stock has been on fire this year, right? I mean, it's been absolutely just killing it. Okay. Now, if you look at the estimates from the last quarter, it basically beat, but it wasn't like something that was earth-shattering. And the revenues are kind of in line. This is not a stock that's going to just surprise you with this out of this world Tesla like numbers or whatever the case may be. Okay. But it is steady. And it is a stock that basically has seen a lot of benefits from the market rally off the lows of March of 2020 this year. Okay, but it is also trading near its all-time highs, and there's a couple of signs, a lot of signs that it may be ripe for a pullback because a lot of the cloud stocks and productivity software stocks have pulled back. The only notable exception is Autodesk, and we're going to talk about that simply because Adobe and Autodesk are grouped into the similar design productivity software space. But there is vast difference between Adobe and Autodesk. Even if the charts look super bullish or has been super bullish, there's some kinks in the armor, which suggests that hey, maybe this is going to pull back significantly where we can profit from it. But more importantly, I want you to pay attention to this insider buying and selling because a lot of this can give you some clues, not always the exact, like a profit like prediction, but you can predict certain things, right? In 2017, the trend of insider buying and selling was declining, right? 2019, same thing. Okay. Now, in the last 12 months, Adobe has sold approximately $76 million worth of insider selling. And guess what? Look at this trend. It's down. This time this year, though, from Q1 and up, it's been going up, trending up. And generally, I like to look at these kind of things to see where the insiders are. Generally their behavior, no matter what. I know some of you might say, well, but they've been selling a lot higher levels than now. Bullcrap. Okay, they've been selling a little bit, and when you see a trend that is showing you that the insiders are kind of maybe beginning to think that maybe this is near the top and they might want to cash in, and that's what it tells me. I don't care what you might think. But at the same time, I'm just pointing out these obvious trends for us to consider. Now, the earnings really is not going to matter. I expect Adobe to come out with good numbers once again and even raise guidance. But you know what? There's a time and period in which no matter what the good news is, if it's near the top and it's starting to stall out, it will sell off. And I think that's exactly what's going to happen to Adobe unless they pull a miraculous numbers out of their butt, saying that they're growing literally 30 to 50% margins. I don't think that's going to happen. Okay, Adobe's a very mature software company, but it just happens to have a pretty decent range if it starts to crack that I think it's worth our time to look into shorting it. Now, what do I mean by that? So let's get in here and let's get moving to the next one. Okay, so this is kind of like what I like to do, what I call macro daily financial charts, and where I look at what did the stock do after each earnings period dating back into the Q4 of last year. And so let's start with the most recent one, Q3. They beat earnings and guided higher, right? They report after hours, so the next day it popped. It looked pretty bullish to me, right? And what did it do? It decided to sell off, and it sold off for a few days down. Okay, so that's very, very important if you think about it. So we also noticed that in Q2, they beat EPS but missed on the revenues, but it didn't matter because they guided higher, okay? It really doesn't matter for this stock, right? So what did it do? It expected probably some bad news, and it popped and dropped, and so there was a little bit of shorting opportunity for day one and day two. But then, there's this gradual upward movement that occurred on Q1 again after hours report. So the next day it beat earnings, and they gave an inline guidance, and it popped on lower volume. And then of course you know what happened in March 12th. That was towards the tail end of the sell-off that occurred in the market crash. So it didn't matter if they reported, but really if you think about it, if they beat earnings and they gave an inline guidance, generally you can expect the stock to pop, but then look for the top of the market and you can short this. Okay. Now, in Q4, they beat earnings and guided higher. They're fairly bullish in this situation. But what it did was it gapped up higher, ran up 2.9%, and then it started to run off. Okay, so the moral of the story here is when you look at when this started to pop up higher, this was not near its all-time highs. We are near all-time highs and trending sideways into a channel chopping. Okay, so a lot of you could say, well, it could chop, and if they have good earnings, it could go up. Absolutely. That's why we're going to wait until the earnings report and then just have the playbook, and which we'll go over towards the end of this video. But this is what we think. Earnings really is irrelevant at this point. I think Adobe's going to report really good earnings, and I think they may even guide higher, but that's going to be temporary. It's time to sell the stock. Okay? So let's get moving here. Now, let's look at the daily technical picture. Daily technical picture is fairly bullish, okay? But, again, I'm telling you, it's trading in a channel. Here's the all-time highs right here. It hit that and then it pulled back. It did that again here and it pulled back. And it's doing this again. And so what do you think is going to happen here? Most likely it's going to pull back, at least test its range down to these probably between 455 to maybe 444 level, okay? I'm not saying it's going to all happen in one day, but about 2 to 3 day time period, that could very well be. But I got to tell you, the buy volume is definitely higher, the conviction of buying, as opposed to the sell volume, especially the day after when it recovers. And the volume is going up, buy volume. But remember, the insiders are selling right now. MACD is fairly bullish. It's coming off from the negative trend, but it looks like it may want to do one of these death hook scenarios after the earnings. And CCI, it's definitely in overbought territory. Every time it came up into these levels, it sold off. Every time it came up into these levels, it sold off. And accumulation and distribution, if this thing was sky high like that, then I would say something. But really, it's stagnating, or even better yet, it's kind of going down a little bit. Okay, so that's the daily. It is bullish, okay? Some of you might say, oh, it looks like a cup. Maybe it is, maybe it isn't. But regardless, okay, we have an increasing volume, okay? And so right here, I made both cases. Yeah, it looks bullish, but it's also stalling out. We saw the stalling action at these levels, commensurate with the CCI. So let's look at the weekly real quick, okay? Let's do it. Let's look at the weekly and see what's happening here. Oh my goodness gracious, man. This is a bullish chart, right? It looks like a flag pull here, and then here's a bull flag, right? But it's trending in a sideways pattern. From here, RSI was the highest at these points. Even at a much higher level, RSI is now diverging as it's hitting all-time highs, and it's basically coming down, right? You could all see that. That's RSI divergence. For those of you that took the chart divergences courses, you know what I'm talking about. And if you don't know it, then click the link below and find out how you can learn, okay? Now, here's the other thing. Look at these sell volumes on the weekly. Very different picture on the volume side on a weekly basis, right? And it is near the all-time highs. And some of you are going to go, but that's a bull flag. It may well be, but bull flags also can break down severely if it fails. And we think that, look at this range here. If I'm right, look at this range from 492 to like, what is that? Like 411? Okay, I mean, I think that's possible. 492 to 437 level. Anyways, there's a really big range. Look at the MACD; it's bearish. Some of you might say, "Well, it looks like it's going to make a bullish cross." Maybe it will, maybe it won't. I've seen many times that where it hit these and after earnings and just crap back down. Look at CCI is declining. It is now off the overbought level, but it also means that there's some active selling going on or distribution going on into the stock. So let's compare the Q4 because that's what matters, right? In 2019, I told you they reported good earnings, they beat earnings, they guided higher, and it gapped up and ran, right? But it was not near the all-time highs, okay? I'm telling you right now, even if they report good earnings, at this time, it may be most likely that people are going to take profits. You don't believe me? Let's look at Q4 2018. Look, they beat earnings, revenue was in line, okay? So that's something that we want to pay attention to, but they gapped down a little bit and it crapped out for the next 5 to 6 days. Look at this range, 242 to 207. The first day one range was pretty significant right here, 242 to 230. Either way, I think this is generally the tendency of the stock is to sell off after in Q4. Okay, 2017. Okay, because 2018 had some bearish bent to it leading into December. I remember that very well. But they reported earnings after hours the next day. Look, you short the top and then come down to the bottom. You also had the ability to short for about 4 days, 179 to 174.0. Not that much, but really, if you think about it, this was near 180 and then it basically, 180 to 173. Okay, so that's kind of the range, but this was about 3 years ago. Okay, the stock is much higher now, and it is not at this time in 2017. It wasn't very overextended either, but now we are. Okay, so what do we do? Now, I talked to you about Autodesk, and a lot of you guys are going to say, but look at Autodesk. Look what they did. They reported good earnings, and it just freaking ran, right? 252 to like 282. I mean, that's pretty decent in the following days that it went up. However, the difference between Autodesk and Adobe right now at its technical posture is that Autodesk did not have increasing insider selling. But not only that, it was nowhere near its all-time highs, nowhere near stalling out. So therefore, we believe that this is not going to happen, not happening for Adobe, okay? But we do advise, for those of you looking to short this, is to wait until earnings are released and then look at the first 30 minutes of price action before you do anything, okay? Do not front run this. Okay, now, so conclusion is the following. Adobe chart is very bullish unless you look at the weekly chart, right? It shows that it's near the top and it's being accumulated on the daily side, but it's also being distributed on the weekly side. I take the weekly at all any day. RSI is diverging. This is what happens near the top, guys. So Autodesk, closest analog company to Adobe, reported stellar earnings. I think that it's not going to follow that because we are in a very different situation than Autodesk was when it reported earnings like a month ago. And also, Adobe sells off on Q4 earnings. Historically, there's an increasing selling trend in Adobe in 2020, okay? And there's that divergence. So here's what I will say. The markets have been melting up and grinding slowly higher and higher. It looks like it's just going to go forever and ever. But these are the times you got to start looking at these charts and start to understand that everybody that's going to buy has probably already bought, and realistically, okay, the risk is to the downside at this point. So how do you trade this? Look, guidance is important, but even then, I don't think it's going to matter. I think this is going to sell off, even if there is a blowout earnings, okay? Now, you may want to consider calls if they give a blowout earnings like Autodesk did, or they pull something out of their hat, whatever, you'll know because based on the price volume action, then buy calls by all means. But we think the more likely trajectory is after a brief pop, you're going to have a pretty decent range to short this, okay? So what we want to do is we want to wait for a small pop and a stalling action. What I mean by stalling action is really look at the price volume action in the pre-market, and also when it's popping, Is it going up on average volume, below average volume, or above average volume? Those are very, very important. You want to short for an average of 2 to 3 days by swinging this, and expect the range is about 23 to 32 points, probably from day 1 to day 2. But if you can hold this to day 3 to day 4, and if market conditions get bearish, you already saw what kind of range I'm looking at. Okay, so that's kind of my analysis at 13 Market Moves. Thank you for listening. Okay, if you want to learn about the strike prices, what kind of puts to buy, how we arrived at this, or if you have any questions whatsoever on chart divergences, click the link below. Schedule a 20-minute consultation with our senior traders. You won't be sorry. Okay, anyways, let's rock. Let's make some money. Okay, and I'll see you next time. Bye-bye.